What's up, YouTube? This is Thomas from Thomas Invest, and thank you for watching. In this video, we're going to talk about Procter & Gamble, ticker symbol PG. We're going to check what brands PG has, some competitors of PG, and compare the revenue, market cap, margins, and return on equity. In the last part, we're going to check their dividend dashboard and the stock price. Remember to always do your own research and never fully trust on what I or other YouTubers say about a stock. I'm not a financial advisor and this content is just for entertaining purposes only. If you're new to the channel, make sure to subscribe to get notified when I'm posting a video. I also appreciate an early thumbs up, which helps me within the YouTube algorithm. For now, let's dive into it. The Procter & Gamble company is focused on providing branded consumer packaged goods to the consumer across the world. PG operates through these segments: beauty, grooming, healthcare, fabric and home care, and baby. On their website, they have a beautiful explanation about themselves. PG products have made a name for themselves by combining what's needed with what's possible, making laundry rooms, living rooms, bedrooms, kitchens, nurseries, and bathrooms a little more enjoyable over the 181 years. Okay, let's talk a little bit more about PG brands. PG has different kinds of market leader brands within the portfolio. Let's take a look at these brands. As shown here, there's a wide range of selection. You will see some of the biggest brands which we're all familiar with. You will find most of the brands in every home, and that is what makes them a powerful company. There's no way you never used a product of PG before. In these two pie charts, you will see the revenue mix by segment and by geolocation. 47% of PG's revenue is generated in the US, while 22% is generated in Europe. The biggest product segment is fabric and home care at 33%. In second, we have baby, feminine and family care with 26%. Beauty is at 19%. Now that we have a clear knowing of what PG does, it's time to check the competitors in terms of revenue, market cap and profitability. The biggest competitors of PG are Colgate-Palmolive, Unilever and Church & Dwight. All of these companies have a great portfolio with some of the best brands. But in my opinion, Procter & Gamble has some advantages. But let's talk about that later in the video. If we take a look at the market cap of all the competitors, we see that Procter & Gamble is by far the biggest. This is something I really like to see. In this chart, we see the growth of PG's market cap over the last couple of years. There were some declines in market cap, but the long-term growth is going upwards. PG has a really nice revenue growth since the last couple of years, as we see in this chart. But we also see that their revenue was a bit higher between 2007 and 2014. But as we can see, we're climbing again, which is a very good sign for me. In this chart, we see the revenue of the main competitors. We do see that the revenue of PG is by far the biggest. But we can't deny there were some better years for Procter & Gamble. But they are growing revenue at this moment again. I also like Church & Dwight in terms of revenue growth. Not such a big player as Procter & Gamble, but they are very interesting in my opinion. Maybe one of my next videos is about them. The next thing I want to discuss is return on equity. Procter & Gamble's return on equity is hovering around 20%, which is fine by me. And if we take a look at the profitability, we see that they have a very high gross margin. This is something I really like to see. Now that we have a sort of clear image on how PG is performing in the recent years, it's time to check where the money is earned for the investor. First of all, I want to talk about the dividends. PG is known for being a very good dividend payer. Procter & Gamble grew their dividends for 64 years in a row. So, they are one of the dividend kings. They have a very decent 2.3% dividend yield at a payout ratio of 55%, which is very nice. The average 5-year dividend growth rate is at 3.6%. This is very important for me, a very solid dividend track record at a steady pace. You won't see double-digit dividend growth, but I don't mind, as long as it keeps coming at a steady pace. The next thing, which is very interesting for an investor, is the stock price, of course. As we see in this chart, Procter & Gamble has risen quite a lot in the past years. Since 2010, there was only 1 year where the stock price of Procter & Gamble wasn't growing throughout the year, which was 2015. I don't think it's fair to include 2021 in this one. Another thing is that if you buy Procter & Gamble in 2010, for example, you have more than doubled your money right now. I'm not saying in the coming 5 to 10 years you are going to double your money again. But it's likely that the stock price of Procter & Gamble is growing at a steady pace of at least 10% average a year, which is fine by me. So, my conclusion is that Procter & Gamble is the biggest company in the sector with an enormous market cap. The revenue is growing again since the decline and they are highly profitable. They have some of the biggest brands in the portfolio, and as I said earlier, there's no chance that there is a house where there are no PG products. This is one thing you have to keep in mind. But it has to be said that there are some big competitors. For now, PG is a buy for me, and whenever there is a dip, I'm considering buying more of PG stocks. But remember, always do your own research and never fully trust on what I or other YouTubers say about a stock. I'm not a financial advisor, and this content is just for entertaining purposes only. I hope you liked the video and I did bring some insights of the company to you. I would really appreciate a thumbs up if you did get some value. Don't forget to subscribe to the channel so you will get notified when I'm posting a new video. It also helps my YouTube channel a lot. If you do have some good feedback for me or the video, please let me know in the comments. For now, thanks for watching and I will see you in my next video.